Hey, I'm Jeremy Bader with Performance Power Play Realty, and today I'm here with Brad Unrau of Maximum Mortgages. Say hi, Brad.
Hello.
How you doing today?
Fantastic.
So, Brad, last year I heard you guys did like $100 million worth of mortgages. Is that true?
Yeah, we did about $95 million in mortgages last year.
Wow. I mean, that's phenomenal. So, you think maybe you can buy me lunch today?
Absolutely.
So today we're going to be talking to you about mortgages, and Brad's here to tell us all about mortgages. So what's the number one reason that people want to come see a mortgage broker, Brad?
Well, the biggest reason is going to be that unlike going to a traditional bank or credit union, when you have a mortgage broker working for you, you'll end up getting more options. If you go to one RBC or a TD or an Envision credit union, whatever they have to offer you is all you're going to get. What we do is we take everybody's different situation and we end up pairing them with the lender that's going to be best suited for their needs.
Okay, awesome. So when people come to you, it's a one-stop shop. You can reach out to all the lenders at the same time and get the best rates for anybody that comes along.
Yeah, that's right.
So how complicated is the application process?
With the application process, what we normally do is we, go through, what every individual story is for their current needs, whether they're buying a home or refinancing a home, and then there is document. We do have to collect documents. So, what's standard is once we have your story, we let you know what we'll need for documents, and then the customer will send in all their documents. We put everything together, and then we start creating the best mortgage solution for them.
Awesome. Mortgage solutions, that's the way to go.
Solutions.
So do you ever get the people that apply, they come in, they fill out the application, and then you come out with the envelope and you just rip it open and said, like you said, your credit was good, but your application determined that was a lie? No?
That does happen.
Okay.
That does happen. And the opposite, people that think that they're not as strong end up being sometimes the strongest people out there.
So without having that crystal ball right now, like rates are pretty low, so the expectation is maybe that they're not going to go down anymore.
So there's a lot of people in this interest rate environment that are just going with the fixed, saying, with them being the lowest they've ever been, let's just go with the fixed rate.
Okay, and then in terms of terms, like 5 years, is that the average that people take?
I would say 80% of people go with a 5-year, whether it's a fixed rate or a variable rate.
So then you want to kind of time it if you're planning on selling to take a shorter term, or if you're not really thinking about going anywhere, then maybe you go longer.
Yeah, exactly. And then you also have the flexibility with most lenders where if you do end up moving, you can do what we call porting your mortgage to your next place.
Okay.
So where do we stand?
I need to talk to my wife. This market won't last. Actually, could I talk to a mortgage broker? Anybody you recommend? Anybody you like?
Yes, have someone.
Brad, so tell us what's the difference between approval and pre-approval?
Okay, Jeremy, with a pre-approval, traditionally, that's when somebody's gone into whether it's a bank or credit union or a mortgage broker, and they've been pre-approved, which is more like a rate hold, and traditionally for 3 or 4 months. And that in that situation, the lender has not gone through employment documentation, down payment, and etc. So it's not. We get confused with an approval. A pre-approval is more like a rate hold.
Gotcha.
Okay.
So that could be dangerous, and if people are out putting offers in on places and they might not necessarily have the backing or funding or approval to buy that place. And especially in today's environment, that can be tricky then to get declined, right?
Absolutely.
So you don't want to get declined, so that's why you want to come see Brad, and he will get you lined up and ready to go and approved, right?
Absolutely.
100%. So Brad, tell us we're getting ready to get a mortgage, so what do I not want to do?
Number 1, don't quit your job. Number 2, don't buy a new car. Number 3, don't quit your job. No.
Exactly. You don't want to quit your job. Like it's like, hey, we're closing in 10 days. I just changed jobs. So that can have a definite impact on whether or not the bank's going to proceed with your financing, right?
Yeah, absolutely. And to go further with that, people love once they purchase a home, they all of a sudden decide that they want to buy a new car. And we always say, wait till the day after you buy your home, then buy the new car. And do not change your jobs.
Shouldn't have bought a new car then, I guess.
I'm not going to look at your weird question.
Yeah. Okay, Brad. So tell us, how do you get paid?
We get paid once we put a mortgage together for you. We, whether it's with TD Bank or Prospera Credit Union, what happens is once it's all done, they in turn send us a referral fee
Gotcha.
for packaging up your deal and sending it off to them, and then they send us. So it doesn't cost the consumer.
So there's no cost to somebody to come to use your services. So it'd be crazy for someone to go, like, say, just directly to a bank, because then they're cutting out all the different opportunities that come up. Is that correct?
That's correct, yeah.
So yeah, you got to come talk to Brad. He knows what he's talking about. He's the mortgage guru. So come see Brad for all your mortgage needs. He's going to help you out. Are there hidden costs that people should be aware of when they're getting a mortgage?
As far as hidden costs, the biggest thing that we find is even one's realtors quite often do not mention property transfer tax.
I would never do that.
Exactly.
Right.
Good realtor. But that's one thing, and sometimes it's a mistaken that property transfer tax can be put into a mortgage,
Gotcha.
which it cannot. The other thing that we find is GST on new construction. Sometimes that.
The government wants their cut all the time, right? So don't forget the GST.
Don't forget the GST.
Don't forget the PPT, property transfer tax.
And then there's legal fees.
Legal fees, yes.
Whether you're selling your home or buying another one, there's legal fees.
Okay, so let's talk about down payments. So what are some of the traditional ways to get a down payment, and what is the required down payment if you want to buy a place?
Good question. So you've got two different types of mortgages. You have a conventional mortgage,
Okay,
where somebody traditionally has 20% or more for a down payment. And then we have what we call a high ratio mortgage, which is like a CMHC insured mortgage.
Okay,
With a CMHC insured mortgage, you can get away with this was 5% down,
okay.
and then with the conventional, it's 20% plus. And
More money down is better, obviously, but 5 is the minimum, right? So also when we're talking about CMHC insurance, then people have to kind of factor that in, because that's an additional cost on top of your mortgage, right?
that's correct. Yeah.
So what is a typical CMHC charge, say, on a mortgage?
So if one's putting 5% down on a mortgage, you can factor in about 4% of that will go to CMHC insurance.
Oh, okay, wow.
So it gets added on top of your mortgage.
Okay, so save your money, folks. Put down the bigger down payment.
And then with a bigger down payment, you can actually get a longer mortgage amortization. So traditionally, if you put 20% plus down, you can get a 30-year mortgage amortization. If you have a CMHC insured mortgage, the maximum amortization is 25 years.
I got a mortgage from Brad, and he's fantastic. His office is fantastic. Everybody there is super friendly. When you call those guys, they pick up right away. Brad, where's your office located?
We're right in Abbotsford.
Right, Abbotsford. So Brad, like you said, he did like $100 million in mortgages in Abbotsford.
He's exaggerating. It's 95.
95 million. So basically, like, instead of the Wolf of Wall Street, we could call you like the Coyote of Abbotsford or something like that.
Sure.
Yeah. Brad, like somebody's not from Abbotsford, say they're from Vancouver or Chilliwack, they don't have to come into your office to fill out an application. They can do this all online, correct?
That's correct. Yeah.
A lot of pressure for people wanting mortgage approvals because everything's selling so quickly, right? So you get the same person and you get like multiple applications. How does that work?
Well, yeah, what happens is there's quite a few people that write an offer. So it's urgent, get everything in, and then sometimes they don't end up with that property.
Right.
And then the best part about that is once somebody's ready to go, if Jeremy doesn't get, if the one property doesn't go through, then we have all their income documentation, we have all the down payment, we have everything ready to go. So the next time it's even easier.
Super easy. And you can't do that at the banks, folks. You just have to keep putting in different offers of different documentation, right?
Yeah.
Who works in your office, Brad? Your lovely partners that I love talking to on the phone every time I call in there. They're so pleasant.
There's myself and we have 3 others in the office, which are amazing. You've got Shavita, Carrie, and AJ.
AJ. Yeah, I worked with AJ.
Yeah.
He's pretty funny.
And yeah, they're all fantastic. Everybody has something that they're really good at. We all work together as a team. And Yeah.
Whenever I call, they're like Shavita or Carrie, I get them, and they're just like, Jeremy, how are you today? And I'm just like, make me feel so comfortable when I'm on the phone. So thank you, ladies. Thank you, AJ.
Yeah, no, everybody loves Jeremy, right? So,
Well, some people do, but well, some people don't.
people always think, exactly, that's the biggest, like a lot of it is just like, do they fall in this pocket and this, somebody's got this amount of income and it's like, and they, oh, you deal with TD? Well, they ain't doing it. So you already got a pre-approval, for example. Like you walk in and got their little pre-approval. Oh,
Yeah.
we're good for 1.79 for 5 years. Well, that's great, but you're not getting it done there because you can go back there, they'll say no. And then here we got you done at Envision, it's gonna be 199, and they're like, oh, that's awesome.
Okay.
So no, that's just for more for you, like because people always and brokers always talk about interest rates. It's a hard thing because people love hearing about it, but nobody actually
Putting the
cares.
pieces, the puzzle together.
We get paid the same if you're at Envision. I'm just picking a thing at 199, or if you're at CIBC at 154.
Right. So you,
For us, it's like we want the, but it's like shuffling into where it is.
so you want to find the best product for the person, right? So
Exactly.
it's not even necessarily
That's why we kind of even say mortgage solutions. Like literally,
mortgage solutions. This is gold here, I think.
oh, were we actually talking about?
The camera was rolling.
Oh,
I'm not
okay.
gonna lie. So we might have to back up and use some of that footage. So basically, I just want to briefly touch on, like if you're renting, you're basically paying a mortgage now as it is, right? It's just not your own.
Correct. Yeah.
So for those people that are renting now, like what's your advice to that individual? How are they going to get a mortgage and get into a place? Like what's their best course of action?
The best course of action is that the biggest stumbling block is usually one's down payment.
Right.
That's that'd be the biggest stumbling block for people. You know, you can
Big borrower steal.
beg, borrow, or steal, parents, co-signers, which can sometimes help to alleviate as big of a down payment.
Okay.
And like kind of going back to what you said, when you're renting, you are paying somebody else's mortgage.
So you're paying a mortgage, it's just not your own, right?
Yeah, that's correct.
So you want to be paying your own mortgage. So like you got to figure out how to get that down payment together. So right now, my understanding is that you can't necessarily take that out of a line of credit anymore necessarily.
You can, as long as your income will support and qualify you based on borrowing some of your own down payment, like from a credit line, for example.
Gotcha. So that's part of your debt service ratio then, right?
That's correct.
Gotcha. Okay. Good to know. Some of the greatest things that you could ever hear are like your baby's healthy, your ex is fat, and you've been approved.
There you go.
Right? Well, that's what Brad does. He does number 3 for you. Not number 1 or 2, but number 3.
It's the easy button.
The easy button. Come see Brad for the easy button. Okay, Brad, let's show everybody your happy dance when you get the mortgage. Let's go like this, or like boop, doop, doop, doop,
There you go.
right? Call me when you're ready to buy, and call Brad when you need a mortgage. Call us both if you want to just go out and have a good time.
Absolutely.
We're here to help you out and to support you through the process. Brad is a mortgage solutions guy. Maximum Mortgages, can't say enough good things about them. They've been great with me. They've been great to all the clients that I've sent over to them. So yeah, please give Brad a call. Call me. Let's buy a house. Cheers.
Thank you.
This could be us celebrating your new home, but you haven't called me yet.
There you
Right?
go.
Call Brad, call Jeremy.
Done.
If you were famous, what would your stage name be?
If I was famous, my stage name would be Thor.
Thor. Thunder Thor. Why Thor?
Because when I was in Mexico once, we were sitting at a cabana and a lady thought, "Why your name's Brad?" She said, "No, you should be Thor."
Thor.
So I'm
Come
going
to
with that.
see Thor for all your mortgage needs.
Absolutely.
He'll get it hammered for you. You can get hammered with Thor.